Welcome to the Better Podcast with me, Jen Beard and Bayleys. Today, we're going to talk about the economy and what's going to happen in the economy in New Zealand this year and how that will impact the property market. You've got Bayleys data guru Chris Farhi and me today. If you're enjoying this podcast, don't forget to subscribe or follow, leave us a review, share this with your friends, and enjoy today's conversation. Well, I am joined today by Chris Farhi. Chris, welcome to the Better Podcast. Thanks so much for your time.
Yeah, nice to be in today.
You may recognise Chris's voice. Maybe you'd recognise his face. Chris does a huge amount of commentary for Bayleys on the property market. He releases weekly video and monthly commentaries about the market, but this is a man who knows exactly what is going on in the property market. I would say day to day, Chris, but let's just say week to week. He has a degree in property and engineering and also a master's in maths from Cambridge University. So he's ridiculously intelligent. He's worked at Bayleys for the last 5 years, has been in property for 15, is also lecturing at Auckland University. So a man who knows a fair bit about what's going on in the market. And it's the beginning of the year, Chris.
I know.
We all want to know what is going to happen in the economy and the property market this year.
Pretty exciting to be in and just have a chat about 2026, right?
I'm fuzzy about it. I think it's going to be a fantastic year. What do you think is going to happen in the economy? What are the indicators showing us?
I guess if we go back to the economy, so let's think about 2025 a little bit, right? So pretty uneven. We saw the rural sector going really well generally, so good commodity prices and good activity in that sector. We saw some of the other sectors were a little bit harder, so retail and construction and that sort of stuff was generally harder. So we've got this situation where things are a bit uneven at the moment. You know, like big picture stats, probably the one that's most interesting is the unemployment rate. So up at around 5.3%, a little bit high, inflation sort of at the top of the target range as well. So we've got a tricky situation coming into the start of 2026. Got an interesting quote here from the Reserve Bank though. So as at November 2025, right, they said starting to see the first signs of improvement off the back of lower interest rates, which is good news, right? So we've had probably a year or two of pretty difficult conditions and we're now starting to see those lower interest rates really kick in and stir things up a little bit.
Yeah, it feels like it has been sluggish for way longer than it normally is when it's sluggish. And it's interesting to hear you say that it's a bit uneven, right? You know, that there's things are going really well in the rural sector, but it takes a wee while for that to trickle down to us 100%, in the city.
100%. And I guess we've had some of the other things around, you know, changes to the government workforce, which for us like office workers have been a bit tricky in some parts of the country. So just a real mixed bag, you know, as at the end of last year. And I guess going into this year, the cool thing is that we've got that sort of momentum from the lower interest rates coming through, a bit more confidence generally across a lot of markets. So that should hopefully get us in good stead just to get this year off to a bit of a roll.
Let's talk about confidence a little bit because we always talk about in residential real estate, we're always looking at the OCR, we're looking at interest rates. That's the big ticket item in terms of, you know, what's going to make a difference in activity levels and prices in our market. Yep. But there are other things like consumer confidence and business confidence that really count. Can we talk a little bit about what those indicators are saying and what impact that might have on the property market, how that impacts where we go?
You've got that sort of sentiment side, which is really important. What we started to see back in the last year was some improvement in some of that sentiment. Like, to be fair, some of those indicators have been relatively weak over like an extended period, but we did start to see a bit more confidence come through those measures. I think those are going to be really positive generally for, I guess, what we do for the wider economy. To be fair, though, I think the biggest indicator or the biggest influence is really interest rates and the situation for that. And I agree, like you sort of alluded to that. Good news is that they're quite a bit lower than they were definitely like 2 or 3 years ago. The tricky thing though is that right at the end of last year, we saw them just tick up a tiny little bit, particularly for home loan rates. So it was an interesting situation last year where we had interest rates kind of steadily dropping over pretty much the whole year, which was like a really positive sort of vibe to what was going on. Like I remember in some of our auctions, you know, we'd have the auction going down and we'd have the OCR announcement basically right at the start of the auction, which was like really good timing for what we were doing. So I think that added a lot of confidence over the course of the year that interest rates were slowly coming down. But right at the end of last year, we saw this sort of weird situation where there was a slight uptick in rates. And so just to give you a sense, I've got a couple of numbers here. So as at November 2025, so like your 5-year home loan rate, lowest across the 5 major banks was 4.99%. Off the back of the OCR announcement, they actually ticked up to 5.29%. There was like this kind of weird situation immediately after the OCR announcement where people were saying, oh, we thought there might be another cut to come, but the Reserve Bank sort of indicated probably not. And then there was almost like this confusion going on. It was awkward because then we had the Christmas break. So yeah. I don't think that fully got resolved. So we might actually see a bit of movement in interest rates early this year as that sort of situation gets polished off.
Where do you think they'll land later in the year? I mean, are we still going to see things, are we going to see things being stable-ish around where they are, or are we expecting another cut?
I'd say we're probably going to end up in a situation where they're reasonably stable for a period. The reason I say that is if you look at what the Reserve Bank was predicting in their November monetary policy statement, they thought the OCR might go up over the course of this year. So it might go from sort of 2.25 to like 2.6 by the end of the year. However, over the sort of recent history, there's been a lot of projections where they've thought things would either stabilise or like tick up a little bit, and it's actually gone the other way. So there's a high likelihood that we basically continue across this year and things are pretty flat on interest rates.
That's kind of what I mean about this sense that it's been really sluggish for a really long time. I think that Kiwis deserve a break. I think we need some growth. We've got some sunshine. We just need some growth to make us feel better about it, right? Okay, so stability is good. The property market likes a bit of certainty, so at least we know that we're not all over the place this year. What do you think is going to happen with property prices? I mean, obviously I'm interested in Auckland, but around the country as well. What are we likely to see?
Our view on house prices this year is that we think they're going to be reasonably stable. The reason we say that is we've got these kind of two things fighting off against each other at the moment. So we've got interest rates, which are like lower than they were, a year ago. So it's a really good positive story. On the flip side, though, we do have this build-up of stock across the market. So plenty of selection for buyers at the moment. Basically, that's just taking that fear of missing out away from a lot of buyers. And without that in play, it's hard to see prices really pushing up like any significant amount. Like we might see them move around, like a little bit, 1 or 2% type of thing. But it's hard to see a scenario where we see a whole bunch of pressure.
Yeah, it is interesting to see those stock levels remaining so high, even though, towards the end of last year, we saw a real increase in the volume of sales, but that increase in volume of sales was matched by, really high levels of new properties coming to market as well, right?
That's been the really interesting thing that I think has not been anticipated by a lot of the market commentators. Like if we went back 2 years ago, a lot of the banks were saying, oh, sweet, market's just going to sort of naturally kick off after the downturn. But what we have had is that big build-up in stock. And I think that talks to probably a bit of pent-up demand from vendors to transact. There's a lot of confidence from vendors, and that was one of the themes that we saw basically straight away when interest rates started to come down was vendors got probably more confident than buyers around what was happening. Yeah, as a result, we do have this stock level, which is, I'm going to say like effectively an all-time high. Gives buyers a lot of choice, means that if you're looking to buy at the moment, you do have a good selection, but it just does take a bit of that pressure out on prices.
From a vendor's perspective or a seller's perspective, it's just really important that you do everything you can to be on the shopping list. Like you have to grab 100%. Attention really early in the campaign in order for people to go, yep, that's one I'm going to go and visit, because they've got 20, 25 to go and see. They're never going to see them all. You have to somehow be in that top 5. So marketing and presentation, just more and more important when its stock levels are like this, right?
The marketing, the presentation of your property, even the little stuff, like any little things you can do to make sure that the photos and the video are going to look better, getting good packages behind it to make sure it's showing up in all the search places that people might be looking. I think that the other area is that if you have a property that's maybe got any challenges with it, like defects or anything, or just things that buyers might pick up on, you want to be ironing those out like as soon as possible, and ideally before you even chuck it on market, because last thing you want to do is have buyers that are generally interested, but then they start to nitpick because, the property down the road doesn't have this issue. So you do have to be a bit careful about that as a vendor.
Let's talk a bit about markets that are bucking the trend in New Zealand, because like for ages, I mean, do I even need to say Queenstown Lakes? Queenstown Lakes is, bucked the trend, but also Southland and the West Coast, for the last year or two, have seen really buoyant markets. Talk about those anomalies.
I guess Queenstown Lake, the story around that's pretty well known, right? The scenery and the amount of supply for sale relative to the demand has enabled that area just to really pull off. And I think the quick stats that I ran the other day was that most markets are sort of down from the peak in 2021. Queenstown Lakes is up around sort of 5 or 10%. So shows that market's been completely operating in a different sort of sphere to the others.
Man, there is a lot of construction going on around there too, right? Around Wanaka and Queenstown.
I think amazing. To be fair, though, they've also got some really cool housing, particularly around Queenstown. They've been very fussy around the design of the housing. I guess that's the council and some of the developers, to be fair, really putting in some nice quality designs. And so, if you're maybe out of the market, like my wife and I, we looked pretty closely at moving down there at one point, and like all the new build housing is just really classy. Like the designs are nice. So you can see how they're like bagging Aucklanders like coming down. Yeah, so that's I guess that's your Queenstown Lakes sort of situation. The other markets that I've found quite interesting has been sort of that lower South Island, and to be fair, Christchurch as well. So the Southland story, we've seen pretty strong performance on prices down there. That's primarily like an affordability story where you can still get housing quite cheap down there. As well, the lifestyle is generally quite nice, providing you've got your job set up.
And your puffer jacket.
And maybe get some cheese rolls. Like if you like them, then you're probably all good. The West Coast is maybe a little bit different because the market down there, generally quite low volumes. One of the issues that has been quite prevalent around some of those areas has been flood risk. And so what that tends to do is swing the activity onto certain properties, which I think puts a bit more pressure on the prices down there. That market's maybe a little bit of an unusual one. The other market that I think is really interesting is Christchurch, right? And how quickly it's kind of become the cool place to be. Like for me, probably the first sort of real hint that I saw of that, as you mentioned, I teach at the University of Auckland. Just hearing from people saying, our kid's going to the University of Canterbury. It used to be like, I guess back in time, University of Otago was probably the one you'd go to if you didn't want to stay in Auckland. But now University of Canterbury's become really cool. I think Christchurch, CBD, like all the rebuild, just looks really cool. There's some nice little neighbourhoods in there. House prices still pretty good availability of stock, good jobs, like good mix of white collar and sort of wide range of jobs down there. So I think that market's actually going to have some really good performance this year. Like my crystal ball sort of pointing towards Christchurch.
Oh, that's so interesting. I mean, I just think that all of that massive investment in infrastructure post the quake is just having, an ongoing ripple effect through the whole community there. I want to take you back to something you said, a few conversations ago. Yeah. When we were talking about Queenstown Lakes, you said it had bucked the trend post the pandemic. I mean, the pandemic was a long time ago, 4 years ago. Are we still having a pandemic hangover?
The real hangover, and we see this come through a lot of the work that we do with our agents in our network, the hangover has really been around price expectations. Where across most markets, so if we go like Auckland, Hamilton, Tauranga, Wellington, the peak prices were in that sort of end of 2021, right? And for whatever reason, the market has really latched onto those peak prices. And it's an unusual one because if you went into somewhere else, like maybe the share market, people don't go, I'm not going to sell my stocks today because 4 years ago, there was this short period where they were like a lot higher. But in the housing
people buying silver today might feel that in 4 years' time.
Yeah. I mean, you get that sort of thing, right? Like, I guess, maybe if you were purchasing in 2021, you'd be a bit fussy about the price you're selling for. But then you've got a whole bunch of people who didn't transact in 2021 and they're still setting their price expectations off of that level. That's been one of the big themes and the challenges that's been coming through when we've been surveying our agents around New Zealand is the biggest sort of challenge when working with vendors has just been price expectations being above like a realistic market level. I guess for our agents, we're always trying to get the absolute best result for our vendors. We work for our vendors, we want to get the best sale price. But if the expectations are just sort of beyond a reasonable level, then it does make it incredibly hard to transact.
The psychology around the perceived loss because those people probably looked at one of the automated valuation models online in 2021 and saw that their house was worth, she says in inverted commas, $2 million. And actually the numbers show that property in Auckland is 20% below that level right now. People just need to be really realistic. If you need to sell, you need to sell.
You have to put your buyer's hat on. Like if you're selling, why would a buyer pay 20% more for your house? And I mean, one of the factors that might sort of influence it a little bit, it shouldn't really, but we think maybe it will, is Auckland's rating valuations up until last year were set off 2021. Like even when we were buying our most recent house, the CV wasn't something that we were too fussy about, but it was definitely like a point of conversation during the negotiations. Oh, the CV's at XYZ level.
But that's because you understand what CVs are there for, and I do too. So for us, it's kind of like it means nothing.
Yeah, we were kind of like, whatever, like we don't really care what the CV is. But I guess if you're not in the industry and you're maybe not looking at some of the automated valuation models, the CV is probably the one thing that you have seen. Maybe it's sort of fixed in your head as like, I think that's a good number.
Just for people who don't know, remind us what the CVs are there for.
The CVs are basically just there to set your rates. So they go through the region, they do the best that they can to set the valuation of the properties across the region at a point in time. And the sole purpose for those is to distribute the overall rates bill across all the properties in the region. So it's not there to help you transact your house or to set the price for your house or anything like that. It's just there to set your rates. But it is one of those things that you get your little letter in the mail with the price on, and you're like, okay, that's kind of interesting, but shouldn't really be featuring in negotiations at all. Like we think there's much better sources, like talk to real estate agents for starters who are transacting in your area, get like a realistic appraisal of what they're seeing based on actual sales. Yeah. If I look at, say, our property, like the valuers who did the CVs never visited the property. They don't know what our house has versus our neighbour's house.
If we think forward into this year, are there any potential clouds on the horizon or things that are kind of bubbling away a little bit in the background that may either positively or negatively impact the property market in New Zealand this year?
If you look at the market this year, so there's a couple of kind of interesting things going on. So the biggest single influence will be whatever's happening with interest rates. Yes. And so we sort of think reasonably stable this year, but like who knows what could happen, right? Like there could be a crazy inflation result, which pumps up interest rates a little bit. There could be some bad economic data, which pushes them down, which in a funny way is like kind of good for the property market. So I think the interest rate situation is probably the most important single factor. If we then start to step out of that, there's probably two things just to think about. One is that there's a whole bunch of crazy stuff happening offshore, like all sorts. One of the foreseeable things that could happen is something crazy goes down and it spooks the share market, which then sort of spooks the market generally. So that could be a scenario, talking about the pandemic. I remember end of 2019, I would have never have expected like that whole sort of thing going down. Yes. And the craziness of that.
And when there's uncertainty, people put their hands in their pockets and stick with what they've got.
100%. They'll just sort of hold up and wait out. I mean, in some ways, if something really bad happened, like maybe to the economy, that tends to lower interest rates, which in a funny way is kind of good. Like we saw that in the pandemic. Yes. Where bad economic data led to lower interest rates and then sort of pushed up property prices. So the whole sort of offshore scenario and some of the craziness there is something just to think about. The other one, which we'll probably see come through our sector, is we've got the election this year.
Of course, the election. I'd almost forgotten about that.
I know. And naturally that leads to a whole bunch of people saying, oh, well, just delaying what they're doing because of the election. And I think in practice, when we've looked at the data for the elections over the years, the actual impact has been basically negligible. So people will say, and they'll sort of put it up as a reason to hold off doing things, but I think the market continues to operate. But it will just be one of the themes that we'll hear this year is people saying, oh, actually, I'll just wait out because I don't know like what's happening in the election. But it's kind of nonsense, to be honest. Like it's not really a thing.
Great. Well, thank you for that. What I've heard is that we are absolutely past the worst of it, that the doldrums have gone away, that we can expect a little bit more activity, but watch this space in terms of what happens on the global stage with the election and interest rates in particular. I am going to set a reminder to send you this podcast at the end of the year.
Don't do that.
And we can maybe have a bet on who's buying the drinks depending on how correct you are.
Yeah, no, that sounds cool. We'll see how my crystal ball goes, I guess.
Fantastic. Thank you so much for your time, Chris.
Sweet. Thanks, Jen.
Have a fantastic 2026. Thanks for getting all the way to the end of the Better Podcast with me, Jen Beard, and Bayleys. If you know someone who could get value out of this conversation, please share it. And don't forget to like and subscribe to the podcast wherever you listen to us. See you next time.